Markets are officially open. Joining me now is Mark Hamrick. He's the Senior Economic Analyst for Bankrate. Mark, welcome to the show.
Good morning. Good to be with you. Thank you.
All right, so it's a big week for the Fed. The highly anticipated September Fed meeting is happening tomorrow at 2 p.m. What are your predictions?
Yes, as those members of the FOMC gather around their large board table in Washington, they obviously have a lot to process. And, obviously the markets are penciling in a modest rate cut here of 25 basis points, 0.25%. That won't be a surprise. What will be more instructive is the summary of economic projections, a document which is produced after every or during every other Federal Reserve meeting. That'll give us an idea about their outlook for everything from growth to personal consumption expenditures, prices. Of course, then the dot plot, what interest rates look like going forward. And of course, with the announcement that is due tomorrow, also we'll be curious to see whether there are some FOMC members who either did not want to have a rate cut. I feel like that is less of a possibility, but perhaps it's a greater possibility that we could have some who wish that we'd had a 50 basis point or 0.5% reduction. And so the dissent will be interesting to see if indeed we have another one.
Do you think a 50 basis point cut is likely or might happen?
I think it's hard to make that argument that there is such a sense of urgency that you need to effectively do the reverse of putting the pedal to the metal in the sense of taking your foot off the brake. Rates are still restrictive, but we know we still have an inflation problem. The focus of the FOMC is, I think, turning more to the part of the mandate that has to do with maximum employment. And you can't say that the economy is at maximum employment given the slowdown in payrolls growth that we've seen between the weak July picture with the two downside revisions that subtracted about 250,000 jobs from the economy, and then the shortfall in the August employment report, and then the benchmark revisions were subsequent to that, subtracting another 900,000. So the job market has less positive momentum now, and I think that FOMC members are likely more concentrated on the part of the mandate, which is obviously maximum employment.
And I know you mentioned potential rate cuts moving forward. How many rate cuts do you see the Fed moving forward with before the end of the year?
Well, I'm not in the business of making those predictions myself, but let me answer the question another way. And that is that I think we may see something that's sort of splitting the difference in the summary of economic projections released tomorrow that could be closer to 2.5 than 3. But we need to take that with that proverbial grain of salt, because the reality is that they go into each and every meeting with something akin to an open mind because they want to see the data. And so we don't know what the data looks like as of December, and therefore we don't want to get too far ahead of ourselves. And so if the economy picks up some momentum between now and December, then you take perhaps a third rate cut off the table. If we see something that is on the other side of the equation, then obviously you go toward more easing. Certainly, a better than expected retail sales report out this morning doesn't help to make the case for 3 rate cuts, but that's just one set of data. And we know that essentially many consumers have just sort of been marching in place with respect to their consumers, with high income, high wealth households doing roughly 50% of the expenditures, which is not indicative of a strong middle income consumer.
And Mark, what do you think the most significant data points are when the Fed does make this decision? What are they basing their decision on the most?
Well, you have to go back to the dual mandate. And so the dual mandate is, the mission in life is to be attentive to stable prices and maximum employment. And if you believe that the maximum employment part of the mandate is the one that is facing the most headwinds, then you're leaning on that. But these are people who can chew gum and walk at the same time, and so they can process more than one data point, and indeed they're doing that. They'll be looking at, through normal times or even abnormal times, they'd be looking at everything from financial market stability. Obviously the stock market doing well is not raising that concern, although you wonder whether there could be some speculative excesses you'd have to pay for down the road. But that's not of key concern right now. So you'll do well by focusing on the dual mandate, and if there's a part of the mandate that is out of alignment with their objectives, that's where they're focusing their attention.
All right, thank you, Mark Hamrick, Senior Economic Analyst for Bankrate.
Thank you.
Still to come, cyber